All right. I think that the stream is live. I'll give a couple of minutes so more viewers can join and we will get started for today. I've prepared a couple of topics. And of course, there will always be time to interact with one another, ask questions, and we'll see where the stream will go. I think one of the topics that is very important to address, and I know it's being perceived as bad news, is the death of Charlie Munger, because of course he's definitely a figure in the investing world, but also a very wise person. I don't necessarily think that he should be this is, of course, it is a bad news, but what a life he had. He was as sharp as ever. And I think that he did his last interview not that long ago, and I hope that I'll be half as sharp as he was in his last years. But yeah, it's a pity that he didn't get to 100. So still, I think what he leaves behind is a lot of knowledge. Now, other than that, the second probably big story for this week was Elon Musk and his response to the advertisers who decided to not advertise anymore on Twitter, and he used the F word to basically express what he thinks of that. I don't think that made a lot of sense, and it was the right decision. Even if, of course, even if he's angry about that decision, it's, everybody has the there's no obligation for any company to use Twitter as a platform for advertising. So, everybody has their own decisions to make. Of course, Disney, for example, was one of the companies that he called out, especially Bob Iger, as somebody who is behind Disney, of course, and a company that pulled advertising. But Disney and their management has an obligation to respond to their shareholders and explain why they made certain decision. However, I don't think that Elon Musk has any say in that. Like, if I buy a company and certain clients leave, can I blame them? I could, but what good does it do? And especially if I use the F word, I don't think that will necessarily help. So in general, I'm not sure how to read this. I mean, I shared yesterday that I sold my Disney position only because there's too much drama around this. And after all, this doesn't help anyone. It doesn't help Twitter or X. It doesn't help Disney. It doesn't help the other companies that are involved in this whole drama. And I don't know. It seems that, especially in the US, but it's in most places around the world, there is a lot of division, and ultimately that doesn't lead to anything being positive or progress. Now, I did notice also this tweet that I thought was interesting and definitely something I'll look into this year or the coming year. In 2022 and 2023, there were very few IPOs. I hope that there will be more in 2024. Reddit has been one that has been preparing for an IPO for probably 2 years or so. 15 billion, maybe. I don't know all the numbers. So once the prospectus is out, I'll go through it and maybe share my thoughts around that. Definitely an interesting platform. And hopefully there will be more valuations to be done on IPOs. I have not done any. I think it's a little bit of a different exercise, considering that there is no public data to look back from a share price point of view. And this also is very good to see the impact of the low rates. So 2020, 2021, when we had the really low interest rates, well, that pushed the valuation of these startups or companies that are ready for becoming public companies, and the valuation went up significantly. So definitely interesting to keep an eye on. And I want to point one meme that I thought was interesting. This one, I don't know if it's from a certain show, maybe from Beckham one on Netflix. We're profitable, be honest. I am being honest. Does your business make actually money? It's adjusted EBITDA. Thank you. I think it's definitely a funny one. This is something that is being used as a nice phrase, adjusted EBITDA, to point to profitability, which, yeah, I mean, I agree with this particular meme. I don't think that's the measure to use for whether a company is profitable or not. But definitely, it's good to see it trending on Twitter for a bit. I mean, 1 million views, it's not bad. It's not bad. And deserved. Well deserved, for sure. There are many of these tweets. I'm not sure, again, which series it is. And it is being used more and more, also in finance and investing. So looking forward to more memes of this kind. Now, before I move into Python programming, I think that it will be an interesting topic for some. There was this tweet, and it's not necessarily related to finance or investing, but I think it is a good question for those who want some sort of a puzzle, some sort of maybe a question to explore, and that is, who is the most photographed person of all time? So I'm curious who you think it is. I see Michael Jackson being mentioned a couple of times. Honestly, my approach was, it has to be somebody probably in the last couple of decades, considering the surge in of course, the access to cameras, especially now in everyone has one with their phones. So then the second question that I had was, who are the celebrities that attend a lot of events? And of course, Michael Jackson, Barack Obama, Taylor Swift definitely have a lot of events. I'm not sure if, for example, the attendance or the audience is that huge when it comes to a president such as Barack Obama. So probably my guess would be someone from the football world, maybe Cristiano Ronaldo, considering there's a match almost every week, and in some stadiums there's 30, 40, 50,000. Some it could be even up to 90,000 spectators. So, and then of course then the question is, are they taking one or multiple photos? So that would be my guess. I didn't check actually if that is being guessed. Oh, there is somebody that pointed to something similar. Oh, 50 games per year over the past 20 years at 50,000 average. It's not, it could be a good comparable. 50 games per year, probably 30, almost 40 in the league. Yeah, I think that's a good estimate. That is a good estimate. But I've been asked to cover a bit more topics around Python programming, and the reason why I wanted to do it a little bit on the live stream is in case there are certain questions. Now, what I have here is I have a couple of files. I'll walk a little bit through the logic behind them. I have a simple Excel file that contains the return of the S&P 500 starting from 1928 until this year. So this is the return of the index. Now, there was I don't know if it's a recent one, but there was a video of Dave Ramsey who made a comment that if somebody has a portfolio, then that person can comfortably withdraw 8% out of it per year forever. And his assumption was that I think the index has returned about 12 or 13% adjusted for inflation. Honestly, I think that his math was a bit off. But in any case, his point was that withdrawing 8% per year is feasible. So I thought, well, I can test that out, right? So here's where Python could play a role. If I'm to test this manually, basically, let's assume that we start with a portfolio of 1 million and whatever currency it is. Well, what we would need to do is either withdraw 8% regardless of the balance, or we would have to withdraw 80,000 regardless of the balance. So there are two approaches to take into account. So let's assume we start in 1928. What we would need to do is start with the million and then compound it or increase it by whatever the index returned and then minus 80,000, right? This would be one approach. We get to 1.3 million. Then we would start with the 1.3 million. We would compound the return or increase or decrease depending on the return of the year. And then again, we're going to withdraw the 80,000 and so on. And we can do this on and on again. And then what you'll see is at some point, you'll notice that the portfolio runs out of money because there were really bad years back in the 1930s. So if I do this approach in order to test if you can withdraw 8%, basically I would need to do this for every single year starting from 1928, which is more than 90 years, close to 100 years. And if I do that, and that is of course for the approach if I withdraw 80,000, and then the second approach would be whatever the balance is. So if it's 1.38, I just withdraw 8% of that. That would be different because it's a relative amount. In this case, the portfolio would never run out of money because I'm withdrawing a percentage of it. It would never withdraw more than there is. However, the withdrawal could be 80,000, but it could also be 40,000. It could be 30,000, depending on the balance. So there are two approaches that I thought are worth addressing to basically confirm, does Dave Ramsey, or is his statement that you can withdraw 8% of your portfolio without running out of money, is that statement correct or not? So the first approach is, let's say, first, just one, maybe approach 1 and approach 2. And, we could test this out, right? We could calculate this. So this is, if somebody started in 1928 with $1 million, that portfolio would have run out of money by, 1935, 1936. So 8% for that. But what if I want to test it for every single year? Well, I could do the same thing that I just did, but it would take a lot of time. And I don't want to do that, right? Why would I spend so much time? And then I have to do the same for the second approach, which would be, taking 8% of the balance. So what I have here is I have two different Python files, and I'll walk you through them just, for those of you who are interested. Let's start with the 80,000 withdrawal. And I'm going to, let me see if the font, I hope that it is readable. So what I'm doing here is I'm reading the file. It is a bit of a fancy term, very complex one, reading. To read the file that I have here. So it takes this particular file, and I'm going to close it so I can access it through the script. And then I have a certain lines of code that are very self-explanatory. So I'm starting with the withdrawal being 80,000. And then it iterates through every single year that is possible to be a starting year, 1928. It goes up until 2024. What this means is it goes up till 2024, but it doesn't include 2024. It's more of a programming language syntax. So it goes up until 2024. That's the last year being 2023. It starts with a balance of $1 million. And then at the moment, starting the portfolio, did the portfolio run out of money? That is false. It's not correct. That didn't happen. And there is no year of bankruptcy. So unless the portfolio balance is below 0, these will remain as they are. So the portfolio will not run out of money, and there will be no year of bankruptcy. And then what happens is it kind of iterates row by row, basically what we just did. So it starts with the portfolio balance, it increases it by whatever happened that particular year, the annual return. Then it reduces it for the withdrawal, and then we have basically the new updated balance. And it continues that same way until the end, or until the portfolio runs out of money. Because here's an if statement. If the portfolio balance is below or equal to 0, actually this would be below 0, or equal to 0, because that also means there are no money left. Portfolio run out of money. That is true. And then we could also see the year of bankruptcy. Now, that is one of the steps within this whole script, which is just take a look at the data, run the calculation, and then what I want to do is I want to see all basically the summary of all the results. So what I'm going to do here is, and this is one of the files, so the 80,000, I'm going to run it by double clicking, and what you'll notice is that in here there is another file, portfolio outcomes. And if I open this file, take a look at what happens here. I have the starting year of every single portfolio that I could run myself. I have the outcome, did the portfolio run out of money or not? If it did, I have the year of bankruptcy, and if it didn't, I have the final balance. And this is basically everything that I need. Now, what I can do is, of course, convert this to whatever currency I want, and I can do further analysis, but now I don't have to perform the task one by one, year by year. So all I need to do is actually analyze, does the statement that you can withdraw 8% per year make sense or not? And if I take a look at the initial screen, right, the first thing that pops out, there are quite some years with bankruptcy. In fact, there are in total 90, I believe it was 96 years. Out of 96, there are 46 times that if you were to withdraw 8%, or 80,000, that would be more correct, 80,000 every year, you would have run out of money. So basically it's 50-50 whether you run out of money or not. And of course, this doesn't include the last years because there is not enough data. But for example, if you take a look at 2004, so if you started a portfolio with $1 million back in 2004, invested in the S&P 500, withdraw 80,000 every single year. Today, or at the end of 2023, you would have 12,000 left, which means next year, this portfolio would also run out of money. Same goes for this one. It's unlikely that this portfolio rebounds. Same goes for 2008. So there are some portfolios that are not out of money yet or didn't run out of money yet, but they're on the track to do so. So it's interesting it's more a simple exercise. It's the script itself isn't that complex, and it gives you enough. It does the more dirty work for you, so you don't have to waste time doing the exact same thing again and again and again. Now, what I'll do is at some point I'll probably work a bit more on this. I'll try to summarize the results and maybe present in one video. This particular script, what we just did now was if you are to withdraw 80,000 per year on a portfolio of $1 million. But what if you were to withdraw 7% or 70,000? What if you were to withdraw 60,000? So at what point does it make sense to have that as a rule that you're quite safe to do that? That is something that I'd like to look into. Then the second part is, and I did mention that, what if you're withdrawing 8% instead of that? So I'm going to double click so we have the file. And you can see it goes quite quick, right? You don't really need to spend too much time in terms of waiting. But basically, this isn't that much different. The only difference is that when the withdrawal is calculated, there's a percentage, and that is what is being withdrawn. So instead of withdrawing 80,000, now it withdraws 8% of whatever the balance is. This one, well, of course, there would not be a portfolio that runs out of money because there will always be money. However, that amount could be very, very, very low. So I'm going to take a look at this data quickly. But what I wanted to see here is not so much if the portfolio ran out of money, because that would not happen, but I wanted to see what would be the lowest withdrawal amount in a given year. So I'm starting with $1 million. I'm withdrawing 8% regardless of what the market does of the balance. And let's take a look at the outcome. I think this is interesting for those who are interested in at least Python programming. It's a simple exercise. So of course you'll see that the portfolio never ran out of money, of course, because you're withdrawing 8% of it. So if you have 1,000, you would withdraw 8% of it. But if you take a look at the lowest withdrawal amount, there will be years, and I'll convert these maybe to a different currency so they're more readable. If you started back in 1928 with $1 million and you're withdrawing 8%, you would have today 110,000, and there would be years where you withdraw $5,617. So you'll notice that the withdrawal amount isn't above 80,000, at least the lowest one. Of course, there will be years when the withdrawal is above 80,000, but still, this is something that is worth noting. That you see, if you started in 2009, which is basically the rebound of the financial crisis, you would have withdrawn at least 80,000 every single year until today. But that is one of the few years, if you go back in time, then you cannot really find such a good year to start, such as 2009, at least if you go back 2 or 3 decades ago. So this is interesting to see. At least I find it interesting. I do like to work with data. I do like to do some analysis. I want to basically figure out, come with some certain conclusions that are not that well known. So this was a simple example of what if, I'm using 8% or 80,000, but what if I wanted to test with 4% or 6%? It's not that much different, because all I need to do is just change one single variable. So here, instead of having the withdrawal percentage being 8%, I could just change it to 6%, and that's it. And if I run this now, I have different results based on a different percentage. And we could, what about if we take 4%? So I'm going to run this, and of course these comments I don't have to change, but I find that more useful. So if I run this, what you'll notice is that it doesn't take too long. And let's take a look at how the outcome looks like if I'm to withdraw 4%. So the lowest amount should be 40,000. Wow, 1942. That is definitely interesting. So if you started a portfolio back in 1942 with $1 million and you were withdrawing 4%, you would have never withdrawn less than 40,000. Never. Until today, still. And take a look at the balance of the portfolio. So if you started with $1 million in 1942, you would have had 21 million today by withdrawing 4%. This is interesting. I mean, these are the type of, take a look at the portfolios that are above $1 million. So with a 1%, I mean, every single portfolio, I'm curious now, let's see if how many portfolios are below $1 million. There's one below $1 million. That is probably the recent one. So if somebody is to withdraw 4% of the portfolio, basically in the last 96 years, you would have always had more than, as a balance, more than what you started with. So 4%, but the lowest amount would have been in some years 7,000. Still better than the 4,000. I'll point out a couple of examples in case somebody is following this live stream later on, unless there are some questions. Python is quite diverse. It can be used for a lot of different automations. And one of the things that I've used it for is, for example, let's say that you like to look into, let's say Apple. You're looking at news related or Apple related news. What you can do is you can search for example, Apple stock news, whatever that may be. You can click on the news button in Google and then you get certain information. Now, in this particular case, there isn't anything interesting, right? But maybe at some point there is something that stands out, some events. And what you can do is, instead of going to Google, typing whatever you want to type, and then maybe you would like to also, I think there was also a way to take a look at the last 24 hours. You don't have to do this manually. You can automate that so that Python goes to this particular link and extracts, for example, the titles. So if you think, if there is a certain keyword, certain search that yields what you're looking for, then you don't have to do that for every single company in your portfolio. So you could do that, or I don't know, if you're looking for Tesla stock news, there are a couple of headlines. Maybe something is interesting, maybe not. So it is something that can be automated. So all you need to do is just run the file, and it could be extracted ultimately in an Excel file where you have the link, you have the title. Sometimes maybe based on the title, you could figure out if that is something interesting or not. And maybe one last example that I'd give, and that is Google Trends. It is something that sometimes I use, but considering all the drama around Disney, I was trying to figure out, are there more cancellations when it comes to Hulu? And same goes for Disney Plus. So we can search for cancel Disney. And the way that Google Trend works is, and I'll take the last maybe 30 days. So what you'll notice is that, shall we maybe do them one by one? I don't know if you can see it quite clearly. Maybe I should pull that a bit here. So what I have here is cancel Hulu, the number of search results worldwide past 30 days. So what happens here is, the way that Google Trend works is, it doesn't tell you how many search results there are, but it tells you how these results are related to the highest point. So for example, there were the most searches for cancel Hulu on November 24th. Hey Scott, thank you for dropping by. And we don't know how many searches there were, but there were basically, we could say that there were 3 times more than usual. And that continued a little bit on 25th and 26th and 27th and even 28th. So that we have 4 or 5 days with more search results for cancel Hulu than we had before. Now, we could do the same for Disney. We could do the same for a different time frame. So we can take a look at the last 90 days. You'll see that there was one spike back in September. Now this is the second one. And we can do this manually. We can do this for every single keyword that we want. Or we can automate this as well. And all we need to do is, when we work on that script, have a placeholder for the search term, whatever that may be, figure out the time frame. So are we looking for, do we want to analyze the data for the last 30 days, 90 days, a year, 5 years? And you can even go back to 2004 and present. And then if you take a look at the data, you can actually use it as a CSV. You can export it out, because basically you'll have access to this data as well. You can also play around with this data. You could take a look at the average. You could take a look at the, how that changes over time. You can create a rolling average. And instead of going to Google Trends, searching for a certain result, all you need to do is just give the Python script certain keywords, and then it would do the job for you. But the idea is, if you are interested in this kind of things, of course, you need to understand the syntax around the Python programming language. That definitely takes a bit of time, but then it's all about trying to outline the steps that you take. So for example, what would be the steps in this case? Well, I need to have a search term. I need to have a timeline. I need to have a region. So maybe I'd like to have worldwide, or I would like to have certain countries. And then all of this basically can be, you can set that as a variable. So you could see how this trends over time. And you could have a summary that says, hey, for example, Cancel Hulu had 10% more search results over the last week compared to a month ago, 2 months ago, or compared to the average over the last 5 years. That's not the difficult part, but it takes time. I mean, ultimately, if anybody's interested in this, you need to put a bit of time to understand the syntax. And I think the best person that I can recommend, in case somebody's watching this, and I know that this is a question that I oftentimes get asked, that would be Sentex. There is this person who has a YouTube channel, Sentex. I don't know when he started, but it's definitely a decade or so ago. And I think he's somebody who, at least to me, he helped a lot in understanding the basics. Of course, if you take a look at the tutorials that he makes now, I've followed some, but they're very, very advanced. But if you take a look at the playlist, I'm sure that he has something for beginners. He also has a book. It's the book on the top. I haven't gone through it. I hope that I will. I'll have time to do that. But I wanted to support the work that he does, and I think that was a good way to do so. But if you take a look at his tutorials, he has all kinds of tutorials. So for example, there's data visualization, graphic user interfaces with Dash and Python, Python AI in StarCraft 3, StarCraft 2. He has, all kinds of tutorials, and I'm quite sure there's intermediate Python programming. I know he had quite some for beginners as well back then. So if you're interested in this, I highly recommend Sentex as a starting point. Basically, just to understand the starting point of syntax, how to run the code, how to read a little bit about it. But then it's all about working on projects, and anything that you can explain, you can actually program. You could automate, and there are definitely many cases. I have used Python a couple of times at my work, not necessarily for financial analysis, but more for, I'd say, data manipulation. I've used it for, I remember this happened probably close to a decade now, maybe 8 years ago. We had a lot of data that we needed to use to calculate the payroll for a certain company, and we needed to translate that into a payslip. So what we needed to do was, have the output being a PDF file that has the name of the employee, the gross salary, all the benefits, taxes, and all that stuff, and the net salary. And we had a giant Excel file, and it took me like 2 hours or so to figure out how to do that, because ultimately all you do is you iterate through every single row, and before that you need to um, set up the template. How would you like the final payslip to look like? So I spent most of my time trying to figure out where I'd like to place the different elements, and then it's the easy part is just doing running the script for all of them, for all the employees. And it was quite a large company as such. It was an interesting project, but the thing is, if you're writing a script for something that is repetitive, it doesn't matter if you have 1 employee or 1,000, because you still have to put the same amount of work. And Python is definitely one of the most interesting programming languages out there. It's definitely very fast execution wise, but I don't use it for all projects. I mean, if it takes me 5 minutes to do something in Excel, well, that's what I do. If it is something repetitive, I do think that there is value to be extracted from using a script. Again, it would take you a bit of time. So for those who have time, I think if you spend an hour or two a day, probably within 6 months, you would do quite well. You would be able to automate a lot of stuff. I'm not sure. I remember when I was asked a question on this topic by a professor of mine. He said, basically the question was, do you think that with this kind of, or with programming in general, you can do quite well in investing? And I still have the same answer, and that is not really, for a couple of reasons. So first of all, if you think about investing, there are different ways to look at it, right? So you can take a look at trading, which is not investing. It is completely different, considering the time frame is much shorter. You're competing with a lot of other algorithms that try to do something comparable. So you can calculate moving averages, you can calculate all kinds of technical indicators, you can program the script to open a position and close a position at a certain point. But you're competing with a lot of other algorithms, and I don't think that an individual has an advantage in that sense. So I don't think that, if I spend a year working on something like that, I don't think I'll be able to make money. Now, investing wise, if you are to use Python to analyze companies, it could help to some extent, but everything that flows into a programming language, it's historical data. So what that means is it can process what happened, but that doesn't mean that that's exactly what will happen next. Ultimately, you would need to take time to understand the business model, to understand what is going on, and to make better decisions. And I don't think that any programming language would do incredibly well in the long run to predict what investment decisions are the best ones to take. I hope that will happen one day. It would be fun to see the rationale behind that. So what are the key parameters that particular program looks at? But ultimately, it has the same data as we have as humans. So I'm not that confident that will happen. One of the things that I want to point out, and I was asked last live stream about certain mistakes investing wise, and I think one of the mistakes that I made is not actually, it's not a company that I invested in, it's one that I didn't invest in. I think it's worth pointing out, and that one is Take-Two. So when I looked into Take-Two, and it is the company that owns a lot of brands, a lot of big name franchises, including, for example, you can see Rockstar Games, the one that the publishing label that's behind GTA, Grand Theft Auto. There's 2K, a lot of sport related games, and I looked at the company and I thought that it's not fairly valued solely because I was looking at the portfolio of the games that they have at the moment. Now, one of the games that is expected to have a huge impact is the GTA Grand Theft Auto number 6 V6 6 or however it's going to be called. But in general, that is something that has been in making for a very, very, very long time. And what I want to do is take a look at. I know that on December 5th there will be the trailer, so I'm not sure how it would look like, but basically a huge part of this increase of about 40% was because of the anticipation of the new game. So this behavioral part, I mean, I don't see how it can really be applied. And if I take a look at the previous one, I think, when was GTA 5 released? It was in 2013, so a decade ago. Now, if somebody is betting on the next GTA and somebody bought back in 2013, obviously, I mean, it would have been still quite well, right? I mean, take a look at it. That's crazy, right? It's amazing return. But if somebody looked at the company in 2020 at the peak, you cannot do relative valuation. So what my mistake was, I looked at the company and I tried to value the everything that they have at the moment. I tried to I ignored GTA 6 because it's been a decade and there has not been a lot of progress, at least publicly. There are always these teasers of some sort, but I mean, a decade is quite a long time for a company to be developing one single game. So I didn't take that into account. I'm not sure. I mean, in hindsight, maybe I should have given it a little bit of value, a little bit of, and at least from a behavioral point of view, it is expected to have an impact on the valuation because it is one of the most anticipated games out there. So maybe this is a lesson for me for moving forward, to keep an eye on what is coming next and figure out how to incorporate that in my evaluation. And of course, when there is another game coming up and it's a sequel, it will to some extent eat the revenue of the previous one. So if somebody is a fan of GTA 5, well, they're going to give it a try to GTA 6, and maybe they'll stop playing GTA 5. So it's not that easy to value what's coming next, of course. And there's a lot of uncertainty. Maybe the next GTA will suck. Maybe there will not be that many users. So we will see how that performs. I'm looking forward to it in a couple of days, the trailer, to see if it creates more excitement. But of course, I mean, I would not be buying Take-Two. I'll not be buying shares in the company. I will follow it. I do enjoy following various companies, and that's definitely one of them. Now, I'm not sure if there are any questions from your side. If not, I'll keep this stream relatively short. And of course, I'll make sure to prepare something for next week. If, of course, I have something to share, then I will live stream. If not, then until the next time that there is something worth sharing. I'll give 15 seconds if somebody has a question. If not, then this would be the end of the stream for today. No questions? All right. Well, thank you for joining. And as always, in the next one.